Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The Asian Development Bank has maintained its growth forecast of 4.5% for the Philippines this year. However, the lender warned that the more contagious Delta variant may pose risks to recovery. Now, ADB country director Kelly Bird told Businessworld that their 2021 outlook was unchanged amid an improvement in economic activity as well as easing quarantine restrictions and the continued rollout of COVID-19 vaccines. ADB's forecast for this year is lower than the government's target of 6 to 7%. The ADB also kept its growth outlook of 5.5% for 2022. Bird said it is highly possible for NCR to reach community protection by the end of the year. And with this, the lender expects further improvements in business and consumer confidence. But he warned that the Delta variant is a major threat to the economy's outlook, especially if this results in another surge in new infections. The ADB will again review its forecast after the release of second quarter GDP data. That's on August 10th. The health department clarifies that 8 Delta variant cases in the country remain active. Now, this after originally reporting that there are no more active Delta cases in the country just yesterday. Infectious disease experts like Dr. Rontjean Solante and Ted Herbosa say the virus might just be taking a while to shed, which means traces of it are still detectable on the patients, even though they are no longer contagious. Still, Health Undersecretary Maria Rosario Verger said they are still doing contact tracing to determine if the Delta variant has spread to other close contacts. For its part, the DILG is pushing for the passage of Bayanihan 3, which provides for additional funding for the hiring of contact tracers. Meanwhile, the Octa research team is pushing for minimal instead of aggressive adjustments in mobility curves. This despite the virus reproduction rate in NCR reaching 1 for the first time since April, resulting in an uptick of cases. The group insists they are not keen on recommending a re-imposition of ECQ, saying the government should stick with increasing restrictions bit by bit. For now, though, the DILG is already looking at tightening restrictions on interzonal travel. That's just weeks after they said that a vaccination card would count as an alternative for testing requirements when traveling interzonally. Now, markets waking up from a holiday yesterday will see their notifications flooded with news about the Delta variant and impending possible lockdowns as they look at the markets today. But first, some good news. If you take a look at my terminal here, you're going to be seeing that overnight in the US, some bargain hunting did ensue, which investors are saying may spill over into Asia today. That's, of course, after there were several days of Delta spooking the market. Delta variant now makes up 83% of all sequenced cases over in the US. That's up from 50% in early July, according to the health officials there. Now, look at Asia Pacific and see whether this prediction has come true. It does seem to be the case over in Japan. You can see the Nikkei 225 up by 1.4%. Over in Korea, South Korea, it's a mixed picture. The Kospi down, the Kosdaq up. So again, not a very clear picture. But in Singapore, the FTSE Straits Times up by 0.4%. Now, this follows after Monday saw the regional stock benchmark, Tuesday rather, dropping as much as 1.4%. And you do have Vietnam's VN index on track to fall into a technical correction. The Straits Times, as I mentioned, in the green this morning, but that is still on track for the third consecutive month of losses in July. Meanwhile, Hong Kong has also said that they will be maintaining most of the social distancing measures over there in the next 2 weeks. Let's take a look at our own local bourse. It does seem to be the case that the positivity over in the US is spilling into our markets. That is after quite a slide. We did fall the most since March. After we reported the first local cases of the variant on Friday, you can see the 3-day chart here, that slump. And now we've just been trading sideways, at least since Monday. We are still at 6,500 levels. We have not gone back to those 6,700 levels we were consistently trading at for several days. And still comes amid the 11th straight day on Monday of net foreign selling. Quick peek here at our sectors. Mixed picture: properties up by 0.6%, with industrials and services also staging a recovery, but financials hardest hit, down by 0.6%. Let's take a look at our leaders and laggards this morning. 6 minutes into trade, LTG pulling up the index up by 2.8%. I did mention properties. You've got Robinson's Land and Ayala Land in the leaderboard, but you've got on the downside Aboitiz Power sitting out this rally, Pure Gold and JG Summit as well. And finally, just a quick check on the currencies here. You can see here everyone in the 1 month, save for the Japanese yen, which of course is the haven currency, is in the red, with the Philippine peso one of the worst performers here. We are down more than 3% in 1 month, and actually in this second quarter. Now, here to chat with us about which technical indicators we must be watching out for at a time when all these fundamentals are uncertain, we have Trading Edge's Ron Acoba. Good morning, Ron, and welcome to the broadcast.
Hi, Danny. Good morning. Thank you for having me.
Okay, Ron, let's take a step back here. We are waking up to more, some news that might be causing some distress in the markets. This, of course, after Friday already saw the big news on the Delta variant. Tell us, how are we performing compared to the rest of Asia, particularly Southeast Asia? We are not the only market hit by this Delta variant. Can you say that despite this slide to 6,500 levels, we are nevertheless resilient compared to our peers?
Well, yeah. Compared to, for example, for the likes of the Thai SEC, SET, the Malaysian KLCI, I think we're faring relatively better compared to them. But generally, if you look at how the markets in general have been performing, not just for the past couple of weeks, but since the start of the year, obviously, if we've come a long way. We've staged a modest recovery region wide, but pretty much it's the same picture. Generally, upward to sideways trend and a little downward movements over the past 2 weeks. One, because of the hawkish stance in the U.S., which started like 2 weeks ago, and then recently, which is the prevailing underlying theme, the possibility that the Delta variant will spread and hinder our recovery is now the one that's causing this massive sell-off that we're seeing over the past few days.
Okay, taking a look at the chart here, Rona, what's the momentum telling you? You can see the MACD here below already, the signal line. Tell us, is this do we need to brace ourselves for even more corrections, or for even worse performance, especially since we've managed to stay. I mean, you can see here, we're staying basically within the moving averages of the past 250 and 100 days.
MACD is one because it measures momentum in the very short term, and you've mentioned that it just crossed the zero line, which means that near-term momentum is obviously pointed downward because of the fact that over the past several days we've just been coming off. So although I might say that at present level of around 6.5, we are technically at a psychological level, which is the 61.8% Fibonacci retracement level of the most recent rally, where the index rose from a low of 6,080 to 7,000. We are still at the risk of revisiting that low of around 6,000 to 6,1, especially with this ongoing Delta variant theme being in place at the moment.
Okay, so there is quite a risk here that we might still test those levels with the support at 6.1. Tell us, can you see the links between the net foreign selling and the movement of our index? Because it does seem to be the case that it's the domestic market really pulling the weight here. But with all of these issues going around in Southeast Asia, is there actually room to run and room for a bull run? If movement restrictions are better in place and there's all of this net foreign buying that might be coming in.
Well, actually, actually before last Friday's downward tick even happened, foreigners were actually on the sell side already. Like 2 weeks ago, because of the fact that when the U.S. Federal Reserve uh, announced that it's starting to converse on whether they would increase their interest rates a year ahead than they originally planned, and whether they would start tapering. In fact, this is evident when on the currency end, when we are seeing that the US dollar to peso exchange rate jumping from a low of 47.60 just during the start of last year to around 51 as of present. So the initial catalyst was that led to a foreign selling. Obviously, a sudden spike or a sudden decrease in the peso relative to the dollar would encourage foreign selling. And now on the both sides, both the way that I see it, domestic investors and to some degree even foreigners still are on the sell side because of this delta variant. Obviously, it's not just isolated in the Philippines. When we're talking about the strength of the US dollar, it's region wide, and we see it. And you've shown it in your chart a while ago with the Thai baht leading the losses. So it's across the board, region wide selling that we're seeing.
Okay, can you link the valuations right now, because we're still nevertheless not very very far from the below 12 times forward
Yeah.
P's that we were seeing in
That,
last year. It's 17.2 right now. So tell us, is this expensive? Does this say anything
well,
about what you're expecting in terms of corporate earnings when it comes
this,
to forward looking earnings?
despite the recent slump of the local market coming off to 6.5 to a high of to a 4 month from a 4 month high of 7,000 2 or 3 weeks ago, the PSEI at present at 6.5 is still trading at around close to 20 times forward PE. And how does it relate to the region's number? Well, the region is only trading at 16 times, so we are still very. In fact, if we look at the other bourses, we are the most expensive in the region, despite the
Oh,
drop. So in terms of relative valuation, we are the ones that is exposed to more downside from that perspective.
okay, interesting point there. Let's see how the earnings turn out in the second quarter. Ron, tell us, Del Monte IPO. Is this something that you're excited about? Investors will be excited about. It's been a long time coming. It's been pushed so far back, and now finally here. But right timing ba ngayon? It was
Well,
already okay, and then
personally, if you ask me, with regards to Del Monte, not really, because of the fact that a good portion of the capital that it will raise through this IPO will just be paid back to its parent, and not really to expand its operation. So for me personally, uh, that's a big X mark for me. But in terms of it having its IPO on a bear market in general, well, knowing that, it gives me some room that, hey, since it's pricing its IPO relatively cheaper compared to when it's a bull market, then that's an upside. That's an upside if you look at it that way. But
what
company
about the
specific,
products of the company in this period? Do you see that the earnings of Del Monte, or the products that they have been resilient, good
in terms
news
of
story?
in terms of product, because of the fact that its products mainly center into pantry goods, then I should say that its portfolio is actually very resilient. Because if you look at how consumer companies performed last year, especially Pure Gold, it actually benefited despite the lockdowns, etc. So eh, if you look at Century Pacific, it's actually trading there its all time high. So in a way, yes. In that sense, it's actually good if you look at it that way. But as I've mentioned, a good portion of its proceeds will be used to pay it back, not really not
Expand.
really
Yeah.
to expand its product line or expand its reach or what have you. So
Okay, so a good price might be good for this, but nevertheless, be conscient about that fact. And finally, Ron, REITs here, particularly Philinvest, they just priced 7 pesos, maybe the middle range. It was gonna be up to 8 pesos and 50 centavos. What's your expected yield here? They've given something above 6%. And are you more confident about this REIT compared to the other REITs in the pipeline? You've got Mega World, you've got RLC coming in. How to deal with the different REITs that are coming in?
well, first, the yield is a very big factor. Remember, Ayala Land priced its IP, its REIT with a yield of 5%. So the next property companies that would uh, would embark on REIT IPO should price their listings with a premium over Ayala Land's 5%. Philinvest Land is pricing it at around 6% yield. So which for me is okay. And I'm actually more confident with Phil Invest Land, not really compared to the upcoming REITs of Robinson's Land of Megaworld, but compared to Double Dragons, more specifically because if we look at Phil Invest Land's portfolio of offices, portfolio of assets, it has a lot of room to grow. It has a lot of assets to infuse in this vehicle moving forward, much like Ayala Land REIT did before. So it eventually added several office buildings, several industrial assets into their vehicle, which eventually led to its ascent. I'm seeing the same thing with the upcoming Philinvest planned IPO because of the fact that it has a lot in its portfolio.
Last question on that. They have mentioned that this REIT will unlock value for the parent company, which they have themselves said is undervalued. Give us more
Yeah.
insight.
Funny that you brought it up because compared to other property developers, Ayala Land, SM Prime, in history of trading, in history of investing, Philinvest Land remained to be thought by the market as really undervalued. But for some reason was having a difficulty of ever reaching that point be, of being close to its fair value. So yes, you mentioned that launching this REIT would likely unlock some of its value because remember, when you launch a REIT, it essentially enables the company to recoup its capital that it spent on those assets. With the new capital, then they would be able to use that money to expand their portfolio further. So definitely that would be a plus in terms of their asset value reaching close to their supposed fair values moving forward.
Okay, so not just the REIT to be watching out for, but how this might affect the rest of the property portfolio, or how the markets perceive anyway their property
Yeah.
portfolio. Thank you so much for those insights, Ron Acoba of Trading Edge.
Thank you, Danny.
Here are the other headlines we're keeping our eyes on. The government statistical indicators on Philippine development 2020 is showing mixed results on the possibility of the administration hitting its targets by 2022. Now, based on the PSA's Stratdev 2020, 126 out of 300 indicators showed high likelihood of hitting development targets when President Duterte ends his 6-year term. Now, the report said that the government was making strides in improving environmental quality and strengthening competitiveness, but it also noted the government's poor performance in progressing science and technology, housing, and agriculture sectors. Despite this, the PSA insisted that it does not necessarily imply poor performance from the concerned agencies. That's because it depends on the number of indicators considered and the available data for such indicators. The Philippine Statistics Authority said it is on track to meet its national ID registration target of 50 to 70 million by the year's end. PSA Undersecretary Dennis Mapa, the PSA registration teams all around the country said are now registering about 250,000 registrants per day. He said the target is to complete both the demographic and biometric registration processes within the year. The PhilSys ID program is expected to help the government with its social programs while easing transactions like opening bank accounts, which will accept the national ID in lieu of multiple other valid IDs. And that's a first look into the business day. Today's Wednesday, July 21, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are one news.